there, my name is Samuel Park. I'm the principal and founder of Fieldland Fisheries, and I'm doing this as a pretty impromptu video while I'm out on the road in regards to some economic issues that we're currently looking at. So, as of recording today, August the 11th, 2021, we've just gotten our CPI data, meaning Consumer Price Index. It's one method used to measure inflation. We've just gotten this measure out for the month of August. Year over year, we're now looking at 5.54%. It's a little higher than what the Fed was expecting, but it's right on point with Wall Street analysts. So lots of people are looking at this saying, okay, hey, inflation is up, but it's not as high as we were fearing. We're not looking at hyperinflation as of yet. So it's looking pretty good. I'm always wanting to put a damper on people's enthusiasm and party, partially because as I'm looking at the inflation numbers and how they're progressing, one thing I want us all to keep in mind is the labor market. Additionally, got an airport right next to me. Or was it? Additionally, one thing I'm going to look a little bit more into myself is shrinkflation. So, let's say I go to the store and I buy a bag of chips. Remember, at least back when I was a kid, when you bought a bag of chips, the thing was full of chips. Now it's full of a lot of air, but the prices remain the same or gone up. That's shrinkflation. You keep the price about the same, but you decrease the amount in it. It's a little bit more difficult to do with things that are measured in exact weights, such as gallons, gallons of milk, gasoline, so on and so forth. But it is something we should keep our eye on. So shrinkflation could be taking place. I know many companies are doing their best to try and shield their consumers from the effects of inflation. Largely the reason why they're doing that is just to maintain that consumer loyalty moving forward, while hoping that some of this inflation just goes away, which I don't see happening. One reason for that being is the labor market. Getting into that kind of briefly, I believe approximately 30% of most companies' balance sheets consists of labor. We all know there's a labor shortage going on right now, or at least you've been paying attention, you're aware of that. And we're starting to see wages increase and offerings for wages increase. Sign-on bonuses, $50 just to show up for the interview. Even hourly wages increasing. Here where I'm at, I'm kind of at the PA New York border. We've got a lot of gas stations by Barn Dairy. I saw, as I was filling up gas earlier today, I saw post-its on the gas pump stating $18 an hour to work at these gas stations as a service tech or whatever. But we have a lot of people who are entering the workforce, and the cost of living is going up, and in order for them to enter the workforce, either by their own volition or once some of these unemployment benefits eventually go away, they're going to need/want to be paid more. That'll be interesting to see how it rolls into our current pricing. So as these people go into the workforce looking to be paid more because it now costs more to live, well, all these companies are then going to have to adjust their balance sheets again. So let's hold on to our butts. I don't think we'll see what we're really looking at from inflation from these various stimulus packages and money printing by the Fed until we get to some more realistic employment numbers. Once we have those come out, and as we see those develop, I think that'll be a good indicator on where we're going for inflation. So keep your eyes open and take care.